Hi friends, Simit here from InformedTrades.com. Today is Tuesday, August 26th, 2014. Time for our daily forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I have on in the markets, all as part of helping traders learn. These are real trades placed on a live account. You can see my entire trading history track record over on InformedTrades. If you have any questions or if there's any also, a lot of the material I'm presenting, maybe if it's unfamiliar to you, maybe use learning section on InformedTrades. Check that out, share your knowledge, ask questions. We can all learn together. Let's get started with a look at the charts. First up, a chart of gold. Interesting price action on gold here. Came down to the bottom of the range here, right? 1270, well-established support going back here, here, here. This really illustrates even here, you formally a resistance level. You can really see the power of support and resistance as a concept here. And just having a deep understanding of this concept can significantly improve one's trading. Let's extend this a little bit here. So yeah, we came down to the bottom of the range here, and now we bounce off a big up day here. One could also say we had a little bit of an accumulation pattern here, only two candlesticks really, but big down day right into support, then two narrow candles, two small range candles, and then a big up day. So, whenever we have this type of price action where we crash into a support level, then have a couple small candles, we want to enter on the small candles, make our money on the big candles. That's sort of a common piece of wisdom or piece of advice for candlestick traders. I definitely think that's true. It's certainly played out here. In terms of where we're going, if we look at this range, you can make a case for the top of the range. You can make a case for resistance here, where there's a 200 exponential moving average at 1305. So I would expect a little bit more bullishness out of gold. Okay, so that's gold. Moving on to the forex pairs. Actually, let's take a quick look at Bitcoin. Okay. Oh, there we go. Okay. So we did bounce off. We found support here. Price came all the way back down here. Couple long wick candles into this range that the price was in before. Then we ran up to resistance at 522. Now we bounced off that, struggling a little bit to get above that. Let's see how this plays out. If we come back down, if we form a new low, so if we go below 441, that's not too positive of a sign. Personally, like I mentioned before, I think the level to short at, you can make a case for shorting from this level. However, I think I'd be much more interested in shorting from 556, right where the 200 exponential moving average is. And that's also 50% retracement from this swing high down to this swing low. It's half the way. So that's a pretty good pullback. And if the candlesticks offer confirmation there, then I'd be really interested in shorting from that level. Of course, long term, I'm long Bitcoin. I got long right about where we are now, or a little above actually. I got long like 526. We're at 510 now. And I'm just holding that, for the duration. I'm viewing it pretty binary perspective. I'm not trying to manage that trade too much. Really small position. I'm looking for a 10 times return, so over 5,300. And I'm willing to 5,200, and I'm willing to risk, the entire small investment I have there. Not too significant, so I need a big return to justify it, and willing to risk all of it, all of the position that I have on. Okay, so that's Bitcoin. Moving on to the forex pairs, Euro-Kiwi. I have three forex trades on. No, I have two forex trades on, and one of which has been de-risked. Let's start with that Euro-Kiwi. Okay. So we're back at where I entered. I entered at 58.21. This is where this black line is right here. And we're right back at the level. However, we do have a reversal candlestick here, right? Let's actually zoom in a little bit. You can see price, long wick. As it came up, it broke above it briefly, but the bears came back in and pushed it down. So that's positive. We've seen that every time we've broken above this level. We saw it here, 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 3, at least 4 times. You might count this one 5th. You might also count this one 6th. Somewhere between, depending on how you're valuing things, 4 to 6 times. Remember, this level 58.21 was previously a support level established here and here. So we have a lot of history at this level, and it's really pulls in the orders where people are either taking profits or they're closing out positions or new positions are coming on. the way this looks here, especially since we rallied into it and now we're seeing these long wick candles, I still think this is a bearish setup. I kind of like the setup. I think it's favorable. So we'll see how this plays out. My position is currently, I'm long at, or excuse me, short at 58.21. My stop is at 59.21. Target profit 54.03, which is the recent low here. Not really changing anything here. I think the candlesticks are offering good confirmation. This candlestick in particular here, August 12th, I think is a bearish checkmate, meaning I don't expect the high to be breached. And that's sort of how I know the trade is wrong. If the high is breached, if we do get to, for instance, 59.02, if we get above 59 basically, the trade is wrong. I put my stop at 59.21 just to give a little extra buffer. But basically, if we get a new high here, the trade has been disproven in a way. Okay, so that's Euro-Kiwi just sitting tight there, basically at break even. Kiwi yen, this trade has already been de-risked. It's not playing out too well though. We had a big down day on to start the week yesterday, and today's candle is also a down day. I had moved my stop because price had cleared this level, this dashed orange line here, which was a resistance level. I moved my stop to break even. So my stop is now at 86.30, which is where I entered, and price is now 86.63, so just 33 pips above where I entered. In hindsight, one could make a case that maybe I should have taken some off here at this orange line. That's not really, in general, I'm still not persuaded by that. I don't want to be too active in managing a currency trade. Sometimes I will. Where I will take half off is if the price has moved 3 times the amount I risk. So I risked, I forget exactly where my stop was, probably right around here. Oh yeah, it was 85.45, right, I believe. Yeah, so 85.45, right here or so. That's where my stop was, and I had been risking 85 pips. So once price moves 3 times the amount I risked, so that is 85 times 3, 255 pips, which would put me at 88.95, right around here. So if price could get to here, where this level right around here, then I may be interested in taking a bit off, taking half off. Until then, the most I'll do is when we get to resistance levels between that point, I'd prefer to just de-risk. Need to hold out for larger gains. That's sort of key to my trading approach. In this particular instance, my target profit is 89.65, which is a resistance level established here and here. But in any event, target big rewards while minimizing risk. That's the other key component, or maybe, in fact, that's probably the more important component. So I'd say minimize risk and target larger gains. But in any event, this trade has been de-risked. Let's see if we come back down to 86.30. Hopefully not. And hopefully we can rally and get going. Okay, Canada-Swiss. I did have this trade. This trade was closed out. I just wanted to discuss it a little bit. Right on, actually, for a while, I saw this coming. August 21st, I had expressed, if you look back at the previous videos, I expressed concern about Canada-Swiss. We had been below. We closed above 83.10, which was a key resistance level, where I had entered. We had the 50 simple and 200 exponential moving average a little above that, though. And price had closed above my entry point, was having difficulty breaking above that. And I was seeing a lot of strength in the Canadian dollar on other pairs. So that had led me to think that maybe I should, close it out prematurely. In hindsight, I definitely should have, and that's something that I'm going to be thinking about in terms of what can I learn from this mistake. When I see that strength on the Canadian dollar and other pairs, maybe I should have just closed it out prematurely, taken a smaller loss. All of my losses are pretty small. I'm only risking 0.25% per trade here, but I could have kept it even smaller. So instead, I ignored those signs, thinking that maybe the 50 simple and 200 exponential moving average could serve as a powerful resistance that keeps price below. I think that logic has some merit to it, but it didn't work in this case, and that's something to consider in terms of how I can improve my trading approach, or something to learn from in this particular trade. That was sort of why I wanted to highlight that. Dollar Singapore, this trade has left the station without me. I'm short at 25.23. It's working out well, but I didn't get filled. Price never gave me the pullback I needed. So I'll be closing this out. We'll see. Other opportunities will come, but for now we'll sort of disregard dollar Singapore. Last thing I want to mention here is euro dollar, and just on the euro in general. We started the week with a gap. And this is really interesting. First of all, let's observe pretty strong downtrend here, okay? And then we have a gap down. This is a novice gap. So novice gap often suggests a reversal is coming soon. And the two candlesticks we've seen here also suggest a potential reversal. So I was actually tempted to put on a long order here on euro dollar. However, this isn't really my preferred style of trading. You know, I'm much more interested in letting a rally play out, and if price can reach, you know, for instance, 3,400 right around here, maybe that'd be a good level to short from. So that's sort of, let me actually at least extend this Fibonacci retracement. Can probably move this down to right around here. So even if price can rally to 33.50, that could be an interesting level, especially if it happens in around mid-September, September 10th or so, where it'll intersect with this downward trend line. That could be an interesting short opportunity. But I do think this novice gap is interesting, especially if you check out our section on gaps on InformedTrades. Novice gap here in the context of a downtrend. When price gaps in the direction of the prevailing trend, that's often a novice gap, and it suggests a reversal. It suggests that the trend, this is novices who are jumping in and quickly pushing it down, and it's going to end soon. Definitely the two candlesticks here, narrow candlesticks here in the midst of a downtrend, suggest we could be getting a reversal soon. That's about it for the trades I have on. No new orders placed today. Just have my two orders, short Euro-Kiwi and long Kiwi yen. Any questions you have, anything you want to add, join us at InformedTrades.com. Best of luck in your trading, and we'll see you tomorrow. Take care.